What up, y'all? Just wanted to give some stock analysis here, see what's going on with the market. Keep in mind that I'm trying to go heavily into AI, but also I want to be well diversified. So you want to go heavy into things you really believe in, but also you want to um be diversified too, because things can roll over. So anyway, I'm just going to show you a few stocks. We're going to show you some stocks that have gone crazy lately and I've sold a little bit of, and what I'm looking in to get into soon. All right, let's look at ARM. I'm just going to briefly go over this. I don't want to bore you with the details. I just want to get into the spicy stuff for today. What ARM actually does: design CPU and SoC technology. ARM creates processor architectures and intellectual property. It's in a lot of devices. It licenses technology to chip makers. It licenses its designs to companies like Apple, Qualcomm, Samsung, Nvidia, and many others. So they have intellectual property that is put into all these chips, and they earn royalties on all that and licensing fees. It's used in smartphones, tablets, sensors, wearables, smart appliances, automotive systems, data centers, servers, embedded in automotive safety, network equipment, and more. Nearly all smartphones on the market today use chips built with ARM's architecture. Why it matters: ARM doesn't own expensive chip factories. It focuses on design and innovation, which makes its business asset light and scalable. As device demand grows globally, from phones to AI servers, so does the number of chips that use ARM's technology, boosting its royalty income. ARM has gone beyond focus of traditional licensing into developing more complete chip designs, particularly for AI and data center applications, a shift that could lead to new direct offerings alongside its core business licensing. In short, ARM holdings build the blueprints others use to make chips instead of building the chips itself. Its designs are integral to modern computing, powering billions of devices worldwide through a royalty-based model. All right, let me get a drink here. Hold on. All right. So let's look at the charts here. I like it because it has gone down lately, and I figure I'll just dabble in it. It sounds like it's in a bit of everything. The other two, and again, I wait till it goes above the 5-day line there, EMA. Let's see. Oh, AIBU is one that I could potentially get into. It's one I've been looking at. But the other two, well, let's see. There's some I've trimmed lately. My last video I had Meta, and in one of my accounts, see how it's at the above 70 RSI? It just took a big old pop right there today. So in one of my accounts, I have the double leverage Meta. And I sold a good amount, maybe 20% or more of it. Let's see, I can't remember exactly how much. I think I sold like 4 or 5 shares, and I had maybe, I can't remember now, 17 or something, or I can't remember the details, but I sold a chunk of it, maybe like 25%. Not all of it, because it could keep running up. Plus, its true value is, let's see, it took a big pop here, but its true value is 850. So, I mean, the meta itself could go to 800 here. So, definitely keeping some. It could keep running up. 850 would be good, or probably just slowly trim some more as it goes up, really. That's why I like the Met U, because you can trim it easier. Because yeah, the Meta stock itself is pretty expensive, so I only own like 1.03 something of that, but I might trim the 0.03 or whatever, possibly. I'll have to look at it, but sometimes it's good. Yeah, you don't want to sell too much. You got to let stuff ride here. But the two stocks I'm looking for tomorrow, Credo Technology Holdings. I was just looking at this one. It has had a down move. So, and I'm going to get into some analysis of what these companies do here in a second. And if they're undervalued, overvalued. CRH, this is industrial building. There could be a rollover into some of the industrial type of sectors. So yeah, I don't want to just do technology only, even though I want to go heavily into AI. You never know when a certain industry can have a regression, like, you know, or what can explode, like silver or things like that. Oh yeah, some of the oil stocks, there's some past videos I did where I was really saying load up on oil. So I have, the other day I trimmed some Exxon. Today I trimmed some Gush in one of my accounts. It looks slightly under the 70, but you could see this bar is down here, so it was at 70 earlier today, so I did trim some of that. That's one I've been kind of building up. Alright, so let's go into the analysis of these. So, Credo Technology. Quick summary: makes high-speed connectivity solutions that are critical for AI data centers and hyperscale cloud infrastructure. Revenue growth has been very strong. Analysts generally rate it as a strong buy with above-average price targets suggesting upside. Structural AI data center demand increases the need for Credo's tech. It is a growing share in a niche where reliability and performance matters. True value. It has some mixed reviews, one undervalued, one overvalued. There is some narrative saying it actually is undervalued if growth continues. A lot of consensus analysis tend to sit well above current trading price. So sounds like there's more. It's mixed, but it sounds like there's more people saying it's undervalued. It has some high multiples, price to earnings, etc. So this is priced for extremely fast growth. Slowdowns could hit valuation hard. So basically this one could explode either way, kind of thing. But looks like it's more likely to go upward. With any stock can go up or down, but so it seems like it could Could go volatile either way. So maybe don't go all in on this one, but I don't own any, but I'm looking to add here probably. And let's see, the CRH. Okay, this is the bull thesis for this is global infrastructure demand. This should support multi-year growth in core construction materials. So yeah, I kind of believe that it might take a while, but I think we're trying to bring more manufacturing here, and there's just always going to be manufactural and industrial needs for multiple reasons worldwide, but especially in the United States. I think they're trying to bring plants back here and stuff, so I do believe that this infrastructure, industrial materials types of stocks, there could be a rollover into that sector. So let's see, historically solid returns, steady earnings growth, ongoing acquisition and share buybacks, enhancing shareholder value. The general consensus is that it's modestly undervalued relative to fair value. Simply Wall Street, that and Morningstar is what I use. It suggests it's 10 to 12% undervalued. So basically, this is a slightly undervalued stock. P/E ratio 24, that's very reasonable right there. All right. Cyclical demand, yeah, that's what I'm thinking. Things cycle. All right. And I just remembered one more I'm looking to get into. Again, it's an industrial and it's diversified industrials. Just to get some like diversity into my portfolio. See, I could buy right there. I kind of didn't catch it go over the green line. I guess I was busy towards the very end of the day, but it closed above that green line today. So, which is the 5-day EMA. So, if it's pretty much like at that level first thing in the morning, that I will see if I could add a little. See if it has the, it should have the stock slices on Schwab where I can just buy a little bit. It's a little pricey at 300. But let's see. I looked something up on GE the other day. Let's see. Let's just do a quick. Yeah, it was saying, yeah, I looked it up the other day and it said it's like slightly undervalued. Nothing crazy, but let's just read this here real quick. Aerospace leadership, strong recurring services. It installs the base of engines. Services generate higher margins than new engine sales. There's some tailwinds in aviation. There's a demand for engine services. Large multi-year deals. Earnings, margins, and guidance trending up. Strategic execution and AI integration. Analyst upgrades and premium growth positioning. Major brokerages have raised price targets on strong aerospace fundamentals. GE is viewed as a winner takes most in commercial engines, which can justify a premium multiple if execution continues. Simplified bull thesis, market leadership in aerospace and highly recurring aftermarket services, secular growth tailwinds, air travel and defense spending, operational execution improving margins and cash flow, supportive analysis view and strategic execution. It hinges on continued strength in aerospace, especially services, improving margins, leverage, and secular aviation growth. It is a compelling industrial growth story rather than a legacy conglomerate. Alright guys, that's it. Just want to do a quick little thing. I'm also looking at pltr and avgo as well, so you could check that out. I don't want this video to be too crazy long, so and probably just looking to for the they have some double leverage on those are options. There's also the options income on those, whether you got the round hill or the yield max that pay weekly. You can dabble a little bit in all of that, but some of those lower priced ones are easier to trade and stuff because they're lower priced. But I'm kind of leaning a little heavier into the double leveraged in one of my portfolios, so playing around with that, so I'll let you know. But some of them are doing good, like that Met U today and the Gush. They're definitely doing good. All right guys, peace.